Good morning, everybody. Happy hump day. Today is Wednesday, February 8th. Hopefully, y'all are having a good start to the week. Today, we are starting bearish, below 50 on the RSI, currently at 43, so a bearish start in the pre-market. And the reason behind this is the market possibly digesting what Powell said yesterday. There was a couple of remarks that I had missed where he said that the peak rate could actually be higher than what they previously expected at 5 to 5.25%. So if we go over to the Fed futures, which I will link in the live chat room, let me get rid of some of these tabs so we don't overload my little MacBook too much. But if we go over to the FOMC countdown, good morning, Irfan. Good morning, Kamala. Good morning, Cam. Good morning, Gary. Happy hump day to everybody. If we look at this, so this is a CME Group Fed Watch tool, which estimates where rates are going to be. And if we're looking at the next couple of months, right now we're at 4.5 to 4.75% for the federal funds rate. And in March, on March 22nd, they're expected to go 4.75 to 5%. So that would be a 25 basis point rate hike. If we go to May, there's another 25 basis point rate hike that's expected, going from 4.75% to 5% in March. And in May, they're expecting it to go to 5.0 to 5.25%. And now the bond markets are expecting this to go as high as 5.25 to 5.5% in June. If we look at the week ago comparison for this 5.25 to 5.5%, this was 2% and now it's 36%. So after Fed Chair Powell spoke yesterday, this ended up climbing more than 30%, which is a significant jump, right? So this means that the bond markets are starting to price in a higher peak rate, where the Federal Reserve was expecting it to be 5.0 to 5.25%, and now the bond market is potentially pricing in 5.25 to 5.5%. The longer that the Fed keeps doing these small rate hikes, the higher this rate is going to have to go. That's the problem. The Fed needs to rip off the Band-Aid and just get the rate to 5% immediately. So really what we need is like a 50 basis point rate hike in March. But the bond markets don't agree with that, with it saying that there's only a 6.3% chance of a 50 basis point rate hike. Now, if we have convincing enough evidence where we continue to see the hot labor market, like we did last Friday with the non-farm payrolls, then that might be more convincing to the bond market to increase the odds of the 50 basis point rate hike. Now, the longer that we keep doing these 25 basis point rate hikes, though, the longer that inflation is going to persist, the more that it's going to eat into the average person's buying power, the more that's going to erode earnings for companies. So overall, this is negative that they're prolonging this disinflation process. And we've been hearing the disinflation narrative coming out of Powell. He said it 11 or 12 times at the last Fed meeting on Wednesday. And that narrative has been pushing the markets up. But we need to make this disinflation process as short as possible in order for people to, save money, in order for this to just be over with and go into the recession. And we are inevitably going to go into a recession. That's the necessary evil in order to kill inflation. So the idea of a soft landing is a fantasy. There's no way to get inflation down without destroying demand, because right now our supply chains are just getting worse and worse. And in order for inflation to get better, they would have to improve, or demand would have to come down. And as long as the supply chains either stay stagnant or get worse, we have to destroy demand by raising interest rates. So that is the morning analysis. that is why I'm bearish for today. We have Fed Williams currently speaking. 5.5, 5.0 to 5.25% is a reasonable view. A lot of uncertainty around the inflation outlook, so they're confirming the 5.0 to 5.25%. So that might increase the odds of not going to 5.25 to 5.5%. Williams, let's see. I want to say that they are a moderate, but let's go to the Fed cheat sheet. $11 for eggs on crack. Yeah, it has to end sooner or later. And the reason why that they're taking it slow is because they don't want the stock market, the bond market, and the speculation market basically to capitulate. They're trying to manage stock market and bond expectations while also trying to manage inflation, which really they should be focused on inflation if that is their main goal, to get it down to 2%. They shouldn't care about anything else. They should just pull the Band-Aid off and let everything drop like 10, 20, 25% or whatever. And that's going to hurt a lot less people than inflation being at 5%. Because inflation being at 5% affects everybody. I think something along the lines of 50 or 60% of Americans are living paycheck to paycheck. So if prices are rising 5% a year, how are they going to get by the next year if their wages aren't going to go up by the same amount? And if their wages do go up by the same amount, that just means higher prices across the board because there's more money to buy in the same amount of goods. So really doesn't make any sense. But Williams is speaking right now, and they're actually slightly hawkish. Right here, Fed from New York. And they're calling for 5.0 to 5.25%. So that could actually shift the chances of that 5.25 to 5.5% interest rate. So these interest rate probabilities are very sensitive to whatever the Fed has to say. And at the same time, the Fed does whatever the bond market is telling it to. So earlier we looked at this, it was 36%, and after Fed Chair, or not Fed Chair, but Fed Williams just said 5.25 or 5.0 to 5.25% is necessary. This ended up dropping by 6%. So that kind of makes me a little bit bullish, but still bearish for the day. So maybe we go neutral for the trade for today. I would say we'd be pretty hard pressed to go above the 418.21 Fibonacci. We also have another Fed member, Fed Waller, speaking today at 2 p.m. Actually, let me check the schedule for that. FOMC calendar. Speech calendar. All right, so we had Powell yesterday, Barr, Waller speaking at 1:45 p.m. actually, and they're talking about the economic outlook at Arkansas State University. So probably going to be some comments out of Fed Waller, who is the second most hawkish member, and he would probably be in favor of that 5.25 to 5.5%, that higher peak rate. But I'm neutral right now. Probably going to close before Waller speaks at 2 o'clock almost, 1:45. And I'll try to open an iron condor in the meantime. So I assume we're not going to pass up the Fibonacci retracement at 418. We could increase it to the top of the risk range, which is $420. And then for the bottom end of the range today, I would say 408, 409, but that's so far away that we're not going to get much credit out of it, I would think. But let me see how much this iron condor is going to pay us. So if we look at SPY, currently it's trading at $413.70 almost. I'm assuming that it'll be below 420. That's the wrong side. I'm trying to do calls for the 420. All right, 420. That's only paying like 4 cents, so that not really worth it. If I do 419, I'm getting 6 cents in credit. 6 to 8 cents. Not worth it in my opinion. And then if I call for below 418, I'm getting paid 9 cents. So none of these are paying a decent credit. So maybe we can wait for the market to go up a little bit more to that 415.08 price level resistance before we open this trade. What happened to the mustache? I tried to trim it, and then I ended up messing up the trim, so I had to shave it all off. Also helps with the baby and not getting food all over her face. But yeah, my expectations. Maybe we could be bullish to neutral ahead of Waller and then flip later on. That could be another route that we take, and we can assume that it'll stay above 411, and that trade is paying us 15 cents. So that's actually half decent credit that we're getting out of that. We are bullish now above 50 RSI, so that does give me another confirmation bias. I don't want to put a lot of risk on this just because my initial analysis is bearish for today based on the higher rates, but Williams is kind of cooling off that as one of the hawkish members of the Fed. So let's see, 15. I'd be willing to put up. All right, let's see. All right, they're paying a little bit more in credit now, 15 cents a piece, to assume that we'll stay above $411 today. That is cutting it pretty close, I would say. If we assume that it'll be above 410, we only get 10 cents in credit versus the 15 cents for assuming that it'll be above 411. So, kind of hard to make a decision on this so far today. If I can narrow my range, that would be ideal. All right, maybe we can assume that it'll stay below 417 by 2 p.m. That trade I'll get paid 30 cents in credit. A little bit more, actually, 31 cents in credit. So if I open a few of these, I'll get paid $100 to risk 200. That's not bad, actually. I like that a little bit more. Not a lot of risk that we're putting up, and because of my lower certainty, I'd be okay with that. All right, so I placed the order, not filled for it yet. I might have to drop my bid to 30 cents each instead of 31 is what I put it in for, 0.3. No, the bid just moved up again. Gotta love Robinhood's bid-ask spreads. There we go. All right. All right, just open that one. Iron Condor. New options alert. P1F. All right. Just opened a new SPY Iron Condor that expires today. So this is a day trade expiring 2/8 is today's date. Thought it was Friday today, but it's Wednesday. Happy hump day, everybody. And I got these at 30 cents credit each to assume that we'll stay above 411, below 417. $417. All right. What is the downside of day trading? You can lose money pretty quickly if there's any substantial moves in the market. You kind of have to be very hands-on, I would say, if you do decide to day trade. So watching the charts almost constantly. I don't watch them all the time. I would say that I check the charts maybe once an hour after my live session is finished, after the first 2 hours of trading. So, like, if you don't have the time to commit to it, then I probably wouldn't day trade. But if you do have, a decent bit of time, like 2-3 hours a day to commit to trading, then I would say it's feasible. So I chose 411 and 417 as the strike prices. So the middle between those strike prices would be $414. So ideally, we want SPY to be $414 and as close to expiration at 4 p.m. as possible to get the most profit out of this trade. Right now, we're trading at $414. I am down by about $6 just because Robinhood's always going to cheat you on the bid-ask spread, but as long as it stays around this price level, we should make a decent profit today. Uber reported earnings this morning, and they are up, which is what I expected. In the weekly analysis video that I posted, I forget exactly what I was saying, but we can always go to my Notion page and find out why. It's always good to have like a journal of what you're expecting. This is what I do each week. And the reason why I was bullish mostly was their cash flow statement. So they were free cash flow positive. This is supposed to be FCF, for free cash flow positive, which means in their operations and the business itself, they're actually making a profit. And they have $8.6 billion of runway, or $8.6 billion in cash. So they're in a good place compared to a lot of other high-growth tech names, which puts them as a decent investment. Now, I haven't read through the report just yet, but they came in at 29-cent earnings per share versus negative 21-cent earnings per share expected, which is a good beat in earnings per share. But let's go to their investor relations page and see what's going on with their actual earnings, because sometimes these companies, because they have so much cash, they can write off things like share buybacks. I'm not sure if Uber is doing any share buybacks. I haven't heard any news on that, but we can always look into it. But if we look at the financials, go to the SEC filings, they don't have an updated 10Q, so we'll just have to go to the Q4 press release. Yeah, this was released today. Gross bookings were up 19% year over year. Not too surprising given the growing economy and the growing demand for services. Let's see. Revenue grew 49% year over year to $8.6 billion, or 59% on a constant currency basis. That's a lot of revenue growth for Uber. That's very surprising. But Because of the high services inflation that we're experiencing, Uber is a service. Transporting people from one place to another is a service. So that's to be expected that they would have higher revenue because they have that kind of leverage. So they did 50%, almost 50% extra revenue this year. Looking at their free cash flow, their free cash flow is actually negative 187. I'm thinking this is in millions, $187 million. So they actually lost $187 million in cash from the business itself for this. Oh, that's for last year. For this year, it was actually negative $303 million. So they're losing $303 million in the last quarter. And then if you exclude HMRC VAT claims settlement, they were free cash flow positive of $430 million. Now that I'm not sure what it is, but they should have something that explains it. Net cash used in operating activities and free cash flow for Q4 includes approximately $733 million or $613 million or 613 Great British pounds. Cash flow outflow related to a settlement outstanding HMRC VAT claims for periods prior to our UK business model change. So some sort of legislation issue that they had to shell out some money for. But I'm looking for their earnings per share, and I want to look at it on a GAAP and a non-GAAP basis. Do I think the markets will crash? I think that it's a ticking time bomb, yes. I think that the Qs especially are going to get hit. And we'll talk about that after I figure out where their earnings per share is placed. All right. So this is their balance sheet. This is the statement of operations. So this is where you'll find the earnings per share. So if we look at their earnings per share, it was, I'm assuming this is on a GAAP basis, 46 cents. Net income per share to Uber Technology stockholders, basic is 46 cents, diluted is 44 cents for 2021, and in 2022, it was 30-cent earnings per share and 29-cent earnings per share. On a non-GAAP basis, let's see if they include that. Non-GAAP. We have operating expenses. They might not list it here, but they will list it in their 10Q filing. There we go. Nope. Never mind. Might not be able to find non-GAAP earnings. Non-GAAP costs and operating expenses, but they don't list the earnings per share in non-GAAP. All right, well, they'll have to do it whenever the 10Q filing comes out, so we'll have to review then. But definitely coming down to the first 20 minutes of the market. They ended up going outside of the risk range above $36.50. So that might be the reason for the pullback that we're seeing right now. Given that they were free cash flow negative for this quarter, that could be a negative sign for the company, but they use the excuse of having to pay off legislators over in the UK. So that's a one-time expense, which means without that, they would be profitable in terms of positive cash flow. Kind of want to make a trade on Uber based on this info, but they are pulling back pretty decently. I want to look at a put credit spread, and I want to assume that they'll be above where they were the last couple of days, which was right around $34. Right now we're trading at $35.60. So we might get a decent credit since we're somewhat close to that strike price at 34. If we set our expiration for the 10th and do a 34 put credit spread, we get paid only 14 cents in credit. I don't feel like that's enough. What is that? $1.50 on a $35 stock is around a 4% move to the downside. I don't know. It's just not enough credit for me to be enticed by this trade. Unless we get closer to 34, then I might end up taking it. So we'll keep this on the watch list. And I just want to keep the option on my watch list too, so I remember which strike price that I was looking at. So February 10th expiration, puts, it would be a 34 put. We can add to watch list and the earnings watch list. So now I have that 34 put in mind whenever we get closer to that 34 strike price. I'd say maybe in the middle at like 34.75, I might want to open that. Right now we're at 35.50, so about 75 cents more that we need to drop. Where do you find if a company is positive cash flow? You'll find that in their cash flow statement. So if we go back to this report, cash flow, sometimes they won't report it in their press release. That happens. But they actually did report their cash flow statement. And this is the cash flow statement. So we want to look at their cash flow from operating activities. And the net cash provided by operating activities was negative $107 million. A lot of this came from an unrealized gain on debt and equity securities. And they were saying that the legislation in the UK also cost them a bit of money, but I'm not seeing that in this statement. But they were free cash flow negative for this quarter. Actually, let me make sure that I'm looking at the right year. I don't know why they listed 2021 and then 2022. It should be the opposite way around. But negative $244 million for this quarter. So free cash flow negative, but they were saying that the UK legislation stuff ended up costing them like $600 million. So they were positive cash flow of $400. If we look at the investing activities, they ended up losing $1.7 billion, $1.8 billion almost in investing activities, most of this stemming from purchase of marketable securities. And then we had in financing activities, they lost $89 million. So at the beginning of the quarter, they had $8.6 billion in cash, and then at the end of the quarter, they had $6.6 billion in cash. So they lost about $2 billion in one quarter, which is pretty concerning. If they kept doing that, then they would only have like 4 quarters left, but I would hope that the CFO would realize that probably shouldn't be spending so much money on marketable securities. Like, they can always step that back and not invest so much. But we ended up getting a bounce at 35.50, so that's probably going to be locked in, I would think, after reading through this. Robinhood is reporting earnings today too. they're probably making a killing right now because retail trading is going through the roof. So the revenue is probably going to be a record. Earnings probably going to be a record. And, their bid-ask spreads are so awful. So, yeah, they're probably going to do really well for this quarter. What is Hood trading at, I wonder? I haven't checked in on their stock in a while. But if we look at the daily chart, this is about in the middle of the range that it's been in over the last year. The MACD is pretty high, so relatively it is a bit overvalued on a daily time frame. Let's look at a longer time frame. If we look at the last 5 years, it's about average in terms of pricing. Or I guess since inception, it's about average since they didn't IPO 5 years ago. They IPO'd back in July of 2021. But they're about average price according to the MACD indicator. So I would actually think that Hood would have a decent quarter just because retail trading is like through the roof right now. I'm not sure how I could find like a good measurement of retail trading. Retail trading volume, maybe. Hopefully these are up to date. Retail trading just hit an all-time high. Here's what stocks are the most popular. According to JP Morgan data, they always got this guy. Oh, please don't make me sign up for your stupid email list. Please don't do that. Percentage of total trading volume came from retail, about 23% in January to February. Pandemic fueled trading frenzy. Plus, stocks were up like 15% in January of this year. So a lot of people just piling into the meme stocks especially have gone up a shit ton. The shorted stocks gone up a shit ton. So that kind of entices more retail traders to invest and trade. Let's see. And another good proxy is my YouTube channel. If we look at the views, they've been up pretty well over the last month since the market started to go up. If we look at the views for, let's say, the last 90 days, sitting at roughly, 4,500 to 5,000 a day, whereas back in, November, it was like 3,000, 4,000. Sometimes I would hit 5,000, but now I'm hitting 5,000 on almost a pretty consistent basis. So a lot more people that are watching these options trading videos. So probably a lot more retail traders. It's not an exact science because I have been posting a lot more videos than I was back in, October through December. But can be used as a decent proxy, I guess, to see how many more people are trading in the retail space. All right. So that is Uber. Looks like they went up a bit. Thank you, Kamala. Try my best out here to get these views and help everybody out. I try to make a goal of getting 5,000 views a day, which I'm close to it. I'm just not quite there yet. Very, very close to it, though. Been able to meet my goals for January, almost spot on. Like I said, I wanted 5,000 views a day. For the last 28 days, we've got 127,127 over 28, around 4,500. So, a 10% miss. And then for my trading, obviously also important. Drive. I've been making roughly $100 a day, so I've been able to meet those two goals so far. For February, I just updated this to include the average daily profit, which I thought was a nice little addition. And I've made $98.60 per day since the start of February. Puts on Greg. Yeah, probably. I mean, if averages are a thing, then I'm probably going to end up losing money someday. I've been profitable for the last 7 days in a row, if we go back to the January calendar. So at some point, the loss has to come. But my goal is to, keep the losses to a minimum. A problem that I had in January was that when I had my losses, I would take big losses. Like I would take a $600 loss in a day, $350 loss in a day, $300 loss in a day, $250, $600. So if we can reduce the size of those big daily losses, then hopefully in the end we're a little bit more profitable. In January, I wasn't profitable at all. I ended up losing $500, actually $485, which I have made back in the first week of February so far. Profits for this month so far has been $493 for around a 7.5% return. And win rate is around 70. Average win has been 95, and the average loss has been below 70. So as long as we can keep the win rate higher than it was last month at 50%, and as long as we can keep the wins bigger than the losses, that means that our expectancy is going to go up, or how much we're expected to make each trade. So that means that, the more money we can make each trade, the more that we're going to gain out of this. Yeah, this spreadsheet is out of this world. I'm a little bit biased since I'm the one who made it, but it's been really helpful in figuring out what's going wrong for me. Again, last month I figured that, taking $600 losses, $400 losses, $700 losses in a day, probably not sustainable for the account. So all right. So looking at Uber again, still trading above 35.57. Coming back to it, if we had waning volume going into the price level and rising volume, slightly rising but still waning actually. So I think we could end up crossing below 35.57 if the volume keeps below these levels that it's at. So hopefully that means we can pick up that put credit spread, assuming that we'll be above 34 later today. Just follow Warren Buffett's rule number 1. Yeah, what is it? Rule number 1, don't lose money. Yeah, I've taken some losses. I took a $72 loss and $97 loss, $18 loss and $84 loss. And if you compare that to last month, I would lose $300. I would lose $600. I would lose, let's see. That sounds like my baby is crying right now. Must be hungry. Lost $500. So what I've been doing in order to help with that is reducing the size of my trades to only between $200 and $400. So, if I'm making roughly $100 a day, that's my goal at least, then that means that I'll only wipe out, say, 2 to 4 days of gains, so I can make that back a little bit quicker than if I lose like $500 to $600. That means that it's going to take 5 to 6 days of hitting my $100 a day goal in order to make that money back. And I feel like, the longer it takes to make your money back, the more it can weigh on you psychologically too. I mean, it's just what I'm thinking. I could be totally wrong and might be stupid, but that's what I'm thinking of it. Right now we're dropping at $413. Wholesale inventories came in positive 0.1% versus 0.1% expected, down from 0.9% last month. So inventories are rising. If inventories are rising, that means that there's more supplies that are on the shelf, which means that the disinflation narrative would actually be intact. But it was a very marginal change of 0.1%. If this was something crazy like 1% or more, then I would say, yeah, that could be disinflationary. But 0.1% change is hardly anything. Fed Cook says believes inflation will be contained without a larger increase in unemployment. Without a large increase in unemployment. Fed Cook says inflation is still running too high, even though it has moderated. So that's a bearish comment that's coming out of Fed Cook. Fed Cook, I believe. Let's see. Fed cheat sheet again. We're in a kangaroo market. Yeah, exactly. Up and down, up and down. But Fed Cook is actually slightly hawkish. Board member. They are voting this year, so that matters. And they're saying that inflation is running too high, which probably means higher interest rates. But they're also saying that we can tame inflation without having a large increase in unemployment. The problem is, with unemployment, it always bottoms before we see a recession. And if the Fed is raising interest rates and destroying demand, there has to be a recession. Like, the people's buying power is diminishing because of the high inflation, and interest rates are going up. So that is decreasing the population's buying power 2 times over. So I don't see a way that we can get out of this without seeing higher unemployment. And what I wanted to show y'all was something that I brought up yesterday from Maverick of Wall Street. It was unemployment versus recessions, and how you'll always see a dip in unemployment before the recession. Let's see if I can find his post there. It was a couple days ago, right here. Unemployment rate. So the gray columns, rows, I don't know if it's up and down, which one is columns or rows. But every time that we have a recession, it's always preceded. So before, there's always a low unemployment rate. And considering that we're at a historical low, I would say it's pretty likely that we're going to get a recession. But the timing of it is unknown. Like, we could go all the way down to like a 3% unemployment rate. Right now, we're at 3.4%. So it's hard to really predict exactly when the recession is going to start. But recessions are always preceded by low unemployment rates. All right, we're trading at 413.48. So we're pretty close to that 414 level that I needed the iron condor to be at. Uber is falling at 35.14 at the moment, so we might be able to snag that put credit spread on Uber. The iron condor that I opened is break even, slightly positive. I got PayPal puts for their earnings, which is tomorrow. NVIDIA put debit spread that's expiring in 2 weeks. That one is very out of the money. That's concerning. It would have to drop like 30% for these to gain any value. I opened 3 of them at 94. They're trading for 27 right now. So we might end up having to take the L for that. But let's see. Looking at the gold call, Leaps call that I bought. This one's actually performing pretty well. This is up by $18 since I opened it at $31.25. Currently $31.43. The dollar index is flat. And if we look at GLD itself, it's trading at 174. I think I opened this at like 173. I think it has roughly a 80 delta, if I remember correctly. let's see. Yeah, 81 delta. Theta is $2 that I'm losing each day that passes. So that's eating into my profits a little bit, but since it has that long expiration date, I don't have to worry about it as much. I do plan to sell a call option against my leaps, a poor man's cover call, before the CPI comes out next week on Tuesday, I think, or Wednesday. Tesla's over 200 right now. Tesla. Yeah, a recession is inevitable. I think that a recession, it's hard to put a time on it, but if I did have to put a time on it, I would say within the next 2 to 5 quarters. So that's the next 6 to 15 months. So between September and, let's see, 3 months, September of this year and then June of next year would be my guess. Sometime in that 9-month time frame. And the reasoning why I'm thinking that is because the cumulative rate hikes has a lag effect. So it's going to take time for the rate hikes that we've been experiencing, 4.5% over the last year, to be felt in the economy. So we rose rates to like 3-4% by October of last year. And given that, I think that's enough to really kind of reel back some of the growth that we were seeing whenever interest rates were at 0. Tesla's trading at 200 though. That's wildin'. Best-selling vehicle in California. Not really surprised there. Mexico president says car maker Tesla's new plant could be installed in the states of Nuevo León or Hidalgo. So they're building a new factory in Mexico. That's actually good. There's cheaper labor that you'll get in Mexico, and if they can send those units to the U.S., they'd be able to bring down the prices. And they can also ship those vehicles down to South America too. It'd be a lot easier for them to do it in South America. But they're proposing either, Hidalgo or Nuevo León. I'm not sure where either of those are, so I want to look them up on the map. Nuevo León, Mexico. I would hope that they would be closer to South America than to North America, just so they can ship those a little bit easier to South America, since they don't have any plants close to South America or Hidalgo, Mexico. Where is Hidalgo, Mexico? So Hidalgo, Mexico is more in the middle of Mexico, so that's closer to South America than Nuevo León, which is right around this area. So I would, if I were them, I would prefer to have it in Hidalgo versus Nuevo. But, I'm not the one that's making these decisions, so. Or just put it in Mexico City. Like close to the Mexico City airport would probably be the most popular place to put it. All right, Tesla's rocketing up, and Uber is getting crushed down to 35.22. So I'm looking at that put credit spread now. The price of the put option just went to 39, so we might get a decent credit here. So Uber, assuming that it'll be above 34 by the end of this week, we will get paid now about 14 cents in credit. That's not that much more. But the ask is 21, so we could probably meet them somewhere around 15 to 16, I would guess. Okay. Maybe 17 even. In this trade, I think I'd be willing to put down a good couple $100. Earnings plays, I don't like to put down as much. Wait a minute. What strike prices did I choose here? No, I chose 34.50. No wonder it's paying so well. I want to do 34. All right, that's paying 20, so that's even better. That'll take. And I'll put up, I'd say, 3 of these. Oh, man. My arm is pulsing right now. All right, let's see if we can get them. All right, got those open. Put credit spread, assuming that will be above 34 by the end of the week, based on their cash flow statement, mostly. This is a swing trade. Just opened a new Uber put credit spread that expires Friday to 10 at 0.20 each. And I chose 33, 34. Uber earnings better than expected at 0.29. Actual versus negative 19 cents, I think was expected. Negative 22 cents, actually. Negative 0.22. Cash flow. Operating cash flow, I should say. Operating cash flow was positive, excluding paying off legislatures. IMO. This could be a decent long-term investment. Maybe. My only concern with Uber would be that they winded down their cash balance from $8 billion to $6 billion. And, if they keep investing like that, $1.7 billion a quarter, they can't afford to do that. So hopefully they step on the brakes in regards to their investing activities. But got that Uber put credit spread, and now we're headed back up to that 35.57. Kind of seems to want to gravitate towards it. Where is that trade? I know I made it. I got the screenshots to prove. Yeah, made $6 on it so far. The SPY Iron Condor is doing us really well. We're trading at that 414 level pretty consistently. Fed Cook says the Fed is not done raising interest rates. That's to be expected. That's not news. There's a lot of Fed members that are speaking today. We had Williams, we had Cook, and I was looking at the calendar, and I only saw 2 of them that were speaking today, but we've had like 2 or 3 Fed members speaking so far this morning. And again, I'm just assuming that SPY is going to be between 411 and 417. So the midpoint between those two strike prices would be 414. And I would probably be concerned if we start to go above that 415.08 level, or maybe below this morning's open or so. Let's see. We open the day at 413.13, which isn't too far off, so we might not be so concerned about that price level. But I'm hoping that we stay in this 413 to 415 range. That would be the ideal scenario before Waller comes out to speak at 1:45 p.m. I'm also thinking about making a Q's trade, QQQ, maybe a swing trade. I might save this for the end of the day, but this could be a decent opportunity too for the downside with CPI coming out next week. If it comes in higher than expected, that would definitely kill this rally that we're seeing. I'll have to do a price analysis before I get into this trade, so hopefully you'll stick with me while I do this, and y'all get to see how I do my price analysis in the meantime, so that's fun. All right, so the way that I like to do my price analysis, I'll start on the daily chart, 1 year, 1 day chart, and I'm looking for either gaps in the chart, or I'm going to look for candles that are bigger than usual. So the first thing that sticks out to me, I'd say the most recent, was this gap right here with a high at $303.43. All right. This candle is pretty big, but it's not bigger than the one below it, and those are somewhat close together, 293 or so and 286. That's actually decently far apart, and that was kind of a resistance level to pass up around here, so that is more important. I would take the average and the open and close, but just for time's sake, I'd rather just get it done and over with. We'll call it 382.9. It doesn't have to be exact. And some other price levels we can look for would be this gap, but it is close to the 304.43 mark, so I don't want to use that. But right in the middle is this gap right here. And the low for this candle was 299.23. So that'll be our 3 supports. Let's see what that price level was again. I forgot. Short-term memory. Low was 299.23. All right, so we got 3 supports. Now we want to look for resistance. We could use this resistance right here. There's no real... I guess this would be the first thing that I would spot, is this significant candle. And we'll try to find about the midpoint. I'll call it 313.90. Which is where we almost got rejected by. Above that, you've got a gap here in the chart. The low for that was 322.08. And I don't want to put one in between. I don't like to overcrowd my charts. So let's see if we can find another around here. This is definitely a candle of significance right here. This was the Ukraine invasion, the start to the Ukraine invasion. We'll call that roughly 331, I would say. All right, so we got 3 supports, 3 resistance on the daily chart. If the dollar goes much higher, that means that the Qs will go lower. If interest rates go much higher because of the CPI coming in hotter than expected, that means the Qs are going to get beat down more. But I want to do... So I start with a daily chart, and then I move over to the hourly chart. So the first thing that I'm spotting on the hourly chart... Actually, this is a longer time frame, so I guess we don't necessarily need the hourly chart. And these price levels are close enough together to where it doesn't matter that much. But I think we're probably going to head down a good 2 price levels down to $2.99 from $3.07 right now. So $3.07 minus $2.99 is $8 for a $307 stock. 8 over $3.07 would be a 2.6% drop. I'd say that's pretty feasible between now and the next CPI report. Let's see. Economic calendar. We'll see what day that is, just to make sure. I think it's on Tuesday or Wednesday of next week. Yeah, it's on Tuesday at 8:30 in the morning. So I'm going to set my expiration date for either Tuesday or Wednesday, depending on how much I'm paying. And I'm going to assume that will be below $2.99. We can call it $300 just to be a little bit safer. Or we could even go like $301 if we really want to be safe. So Tuesday, the date on Tuesday would be the 14th. Just for QQQ. QQQ is already down 1% today, so we are losing a little bit of opportunity since we didn't open this earlier. My timing is never perfect, but pretty good with predicting how events might go. If we do February 14th expiration, since the report is coming out at 8:30, that gives us plenty of time for the markets to sell off on it. And if I choose below $301, we are paying 34 cents to open that, 35 cents for a debit spread. I'd say I'm pretty comfortable with it. If we assume that it'll be all the way below 300 instead of 301, we are paying 32 cents. So there's not much difference between 301 and 300. So I'd rather take that. The bid ask on these is a bit wide because it does have a few days until expiration, or a week until expiration. But this one I think I'd be willing to put up a decent bit, like $300 for. Maybe $250. They're just at a very awkward price at 34 cents, but let's see if I can get filled. All right. Got filled at 34 cents a piece. So new options alert and a swing trade. Just opened a new 300, 301, QQQ, put debit spread, expiring on 2/14, Valentine's Day, at 0.3. It smells like coffee in here. 0.34 each. assuming CPI Tuesday might come in higher than expected from rising oil prices. This would cause a knee-jerk reaction for rates and dollar to go up, which would bring tech and growth names down from recent highs. All right, so we got that trade. So basically, we're leveraged in all directions. We're neutral on SPY. We're bullish on Uber. We're bearish for QQQ. So this will kind of balance out the portfolio to some degree. All right, these iron condors are starting to lose a little bit of their value. We did end up dipping below this morning's open, it seems like. And since we did end up going below it, we got a flood of volume coming in. So we got a lot of volume afterwards, so we're probably going to go back up to retest it. There could be some trader's remorse if the volume keeps going up. So we'll have to keep monitoring the volume here. Possible news that triggered that was crude oil inventories, 2.43 million versus 2.45 million. Not really sure how to read these inventory reports, so can't really give much insight there. But if we're looking at the fundamentals, the 10-year Treasury rate is up again today. Wasn't a gap up that we got this morning, but up nonetheless at 3.6%, which was to be expected. If the peak rate from the Fed is going to be higher, that means that interest rates need to go higher. The dollar index ended up dipping in the morning, but is recovering currently. So we have bearishness that we would expect from the 10-year going up, but neutral that we would expect from the dollar index basically being the same. And then the VIX is currently up 1.2%, still below 20, so not really significant. All right, these iron condors, let's see. Let's check on SPY again. See if the volume is rising or decreasing. All right. Looks like volume might be decreasing after crossing it, so we might have to close the 410 legs. This was the amount of volume before we crossed. So if we go above that level in the blue at the bottom, I would say we retest for 1313. And we already crossed it right now, so rising volume likely to retest. Again, this is what's known as trader's remorse. When there's increasing volume after crossing a price level, you'll usually go back to that price level, and if there's substantial enough volume, it'll go back above that 413.13 mark. back to break even for the 411, 417 iron condors though, so that's good. Hopefully we can make a profit on it. There we go. There's the tick up in volume. So we're probably going to go back above, I would think. All right, the high was close to that 413.13 mark, but didn't quite reach it. All right. So close. We got about 30 seconds till this 5-minute candle closes, and we still have rising or increasing volume. So I think we're going to go back above the 413.13 mark. As of right now, obviously things could be changing, and we might see a slump in volume. But for right now, I think it's likely we go back above. Going back to the Iron Condor, 411, 417. This is up by $12. I'd like to make a bit more out of it if we can. An ideal scenario, we want this at 414 in order to get the most value from it. Volume could be slowing down, it seems. First minute of the 5. Maybe not. Kind of want to check in on the 1-minute candle. All right, volume is slumped and then picked back up, but it definitely increased after we crossed the price level. So retesting it seems like a likely. I don't know though. Right now we're down only $3. I'm kind of tempted just to take out the 410, 411 put credit spread side of it, just so we reduce our risk. Let's see, we originally got paid $30 in credit for these, and if we want to close out of the put side, this will cost us 24 cents. So that means we can only make 6 cents for each of these that we opened. Not really worth the risk that I took on. So it might be just better to close it, especially considering that we got rejected at 50 on the RSI based on the 1 minute chart. 5 minute chart, still below 50 RSI, so I think that says that we're bearish for today. So just close out of this at a small loss. Call it quits for this trade. I got 3 of them. The bid is 26. The ask is 29. And I opened them at 30 cents a piece. So we might be able to get away with a small profit. .29 is what I'll put it in for. Or at least break even at 30. If possible. Alright, we broke even for it. Okay, so this will get put into the closing options alert. Nope, don't want to get all those screenshots. Alright, closing options alert, premium 101. Just closed the, what was it? 410, 411 to 417, 418. SPY Iron Condor that expires today to 8 at 30. Opened at 30, so broke even. I'll go and log that, even though that it was a scratch. Should still log it, just so we can learn from our experiences. This was for February today. Closed it today. SPY, both. Iron Condor, which is a neutral strategy, and expiration date was today, so it was a 0 DTE. Strike prices I chose were 418 for the long call and 410 for the long put. For the other side of the trade, the shorts, I did 411 and 417. I opened 3 of these at 30, closed them at 30, so $0 in profit. All right. But we got the QQQ put debit spread, so if we do continue to go down today, we got a little bit of money on the line to be making with those. About 7 at 34 for the CPI report that's coming out next Tuesday. Candles of significance. Yeah, I can make a video on it. It's pretty simple. The way that it works is you just take the open and close price of the candle. So this would be a candle of significance because it's larger than usual, right? This red one right here. It was also a cross below the 413.13 mark, so that gives it a little bit more significance. And then you have another candle of significance right here, larger than usual. So you would take the open price of it, which was 414.38, and the close was 413.57. and then you would divide that by 2. So 413.57 plus 414.38 is 827.95. 827.95 divided by 2, you get $413.98. So that would be a new resistance level for the 5-minute chart. And you can do this on any time frame too. Like you can do this on the daily chart. You could do this on the hourly chart. And it doesn't matter which chart you're using. But from what I found, these candle significance are usually a pretty good indicator of where the markets could pivot. The other price levels that I tend to use are closing prices and open prices for each day. So on the 5-minute chart, I'll use open prices. On the hourly chart, I'll use closing prices. But we had a candle of significance right here where it's 406.60. So, if we do end up heading down, I would expect a little bit of a pushback for the buyers at 406.60. Yeah, for support and resistance. It doesn't matter if it's above or below the current price. And I can show you a candle of significance that's below too. All right, so we had Powell coming out and speaking yesterday. So that is an event that was significant. And if we're looking for larger candles, we have this green candle right here. The open was 411.44. The close was 413.37. 411.44, 413.37, 824.81. Divided by 2, you get $412.41. You would have to round that up. 412.41. So that would be a new support that's below the current price, 412.41. And I like to label it as red just because it's on the 2-day 5-minute chart. It's not necessary, but something that I prefer to do. And if you look at it, we basically bounce right on that price level with the low of this candle. So we do continue to head down today. I would be watching that 412.10 mark. Below that, we have 410.79, which is coming from the hourly chart, probably a closing price if I had to guess. Yeah, the closing price of the first after the Fed meeting. So that'll definitely be a significant level to watch. Yeah, no problem. Always here to help y'all out. You got the dollar falling a little bit. Oil is rising a little bit more. I think yesterday it was up like 4% or something crazy like that. And you have another 0.5% gain for oil today. So Brent crude is still hot, which means that there's still demand in the economy for oil services. So that's negative for inflation. And if you look at, say, the 30-day moving average, we can look at that to see how CPI might come out. This is how I try to predict CPI. It's not an exact measurement because it's not all about oil, but we can use simple moving average. Move it up to the charts. Where the hell is it? There we go. I don't want open interest. That is irrelevant to me right now. But take the last 30 days. Don't really care about the color of it. So we want to compare the end of January to the end of December. At the end of December, the 30-day moving average was $77.51. And then at the end of January, this was $78.22. So oil ticked up very slightly, but a rise nonetheless, which means that inflation for the month of January could be higher just based on oil prices. And oil is the input for everything, right? In order to transport goods, in order to, make the economy go, you have to have oil. Diesel especially runs the world for transportation. But if you see a rise in oil, that usually leads to higher CPI. It's a proxy for demand, I would say, too. So that's another no for oil. All right. Making a little bit of money from nothing yet. Breaking even for Uber, breaking even for the QQQ trade, up slightly for the QQQ trade, but glad that I got out of that Iron Condor for SPY because we are dropping down to that 412 level. So that would have been a bit concerning for me. Rather save myself from the stress of holding that bag. Maybe we could do a call credit spread, a lower call credit spread. We could assume maybe we stay below. It's already down 0.6% today. I'd say we might stay below. Hard to say. 415 maybe? So another day trade that I'd be taking on. And that one is only paying 15 cents in credit. That's actually an okay credit. I'm not totally against that. And I'd put a little bit more weight on that one too. Let's see. Yeah, I'd put down like 300 for that. That was my initial assumption today, that we would be bearish. And going above this morning's highs doesn't seem too likely, considering that Waller is going to speak later at 1:45. So I think we can open this and be pretty safe. The bid just keeps moving around on me. Probably not getting the best price for this, I would imagine. But we're in. Whoopsies. Wrong screenshots. New options alert. Day trade. Just opened a new SPY call credit spread. Expiring today. 2/8 at 0.14 each. Strike prices I chose. 415. Waller, second most hawkish Fed. Speaking at 1:45 p.m. and other Fed members, and Powell, I should say. Powell hinted at possibly higher peak rate for peak rate, which should send rates up today and stocks down. But yeah, if you're looking at the 10-year Treasury yield, this one is trading at 36.81, and this has been on a rip the last couple of days. Right, we had that huge gap up from 35.51 at the high. Now we're trading at 36.81. So that is definitely a negative for growth, especially. For SPY, not so much. And if you want to take a bullish trade, I would do it in value. So Dow Jones, this one you'll see is still holding up today, whereas if you look at QQQ, this one is down significantly, or not significantly, but decently more. This one's down 1.1% today, whereas the Dow Jones is only down 0.2%. So if you want to hedge your positions I would probably use QQQ for bearish, assuming that rates would go up. If you assume that rates will go up, and then use Dow Jones as a bullish hedge, and that'll kind of help you out if rates don't go up so much, or if they're neutral. You'll still be able to make profits with the Dow. But yeah, I think that's all the trades that I'll make today. I'll make sure to log them before I go. That way I don't forget it later on. Made an Uber trade. Uber put. Whoops. Nope. Credit spread. This was a bullish / neutral trade. Expiration date is this Friday, which is 2/10. Strike prices I chose were... that's a good one. Gotta look that up. I think it was 34 and 33. But I'll double check. 33, 34. Yeah. And I opened 3 of them for 20 credit. And then open the QQQ. Whoops. Today I opened this, and then it's expiring on next Tuesday, which is 2/14. QQQ put debit spread, which is a bearish strategy. This expires 2/14. And the strike prices I chose for this was 301, 300. I opened 7 of these at 34 cents a piece. All right. And finally, yeah, no problem, Peter. Thanks for being here. Finally, the last trade that I just opened was the SPY call credit spread. 415, 416 strike prices. So we'll type that in. That expires today. Day trade, SPY call credit. This is a bearish neutral strategy. Expiration date is today. And the strike prices I chose were 416 and 415. I opened only 4 of them at 14 cents a piece. But I'd say there's a good chance that that trade works out. Especially right now with us trading at 412, that makes it that much more likely. Cross below the $412.10 support level that I had from teaching y'all about the candles of significance. So considering we're below that, if the volume continues to slow down after crossing this price level, that means that we'll probably hold below that 412.10. What's the general consensus of the day? I would say that it's bearish to neutral based on interest rates going up, thanks to Fed Chair Powell saying that we might need to raise rates to a higher peak than what was previously anticipated. So if you look at the Fed futures, they will tell you that now there is a 30% chance, a little bit more than a 30% chance of going as high as 3.25 to 3.5%, whereas previously the peak rate was expected at 3.0 to 3.25%. So that's the gist for today. Interest rates are rising, which means that tech and growth especially are going to get hit. You're seeing QQQ down 1.4% today, and SPY is currently down by 0.8%. If you do want to hedge your positions for the bearish side, I would say that the Dow Jones would be a good hedge, in any value stocks that typically do a little bit better when interest rates are rising and whenever the dollar is rising. So that's the gist of the trading today. And I will catch y'all on, or tomorrow, I guess. I keep thinking today's Friday. I don't know why. But I'll catch y'all tomorrow, Thursday, at 9:30 in the morning. See you, everybody.